John, let's go to our US guests right now. We've got Alan Valdes joining us from the New York Stock Exchange, and I think we've also got Larry Shover, who's with us from Chicago to talk some of the commodity price moves. Alan, just quickly to you, because we've just mentioned with our guest here, John, JPMorgan's numbers. Now, initially, I understand they boosted the market, and then that kind of fizzled in the end. Why? What was the excuse that traders found within the results today to sell?
You know, you're right. And when the numbers first came out, I mean, they beat the street by 12 cents. And initially, the market, the numbers were up pre-opening. The stock was up pre-opening, rather. But then when you divulge really into the numbers, you saw they were a little weaker than expected, especially the mortgages. Mortgages are still a problem out there, and that's what's weighing on them. And the fear is if it's weighing on JPMorgan, which is really supposedly the best bank down here, that what Citibank, Goldman, what are the rest going to look like? So that's why we saw this rally just peter.
And Larry, we were just speaking with John about this idea of looking through positive news, and in fact traders and investors looking for excuses to sell in this environment. You believe that this market's looking pretty tired. Does that kind of gel with your thoughts?
Absolutely. The market is very tired. It's hard to keep a rally going, but there's a lot of bad news right now. I mean, I am long-term bullish, but our numbers, you know, I'm reducing my GDP forecast down to like 3% for quarters 2 and quarters 3. We have unknown certainties in Japan. We just really don't know the outcome. And Japan's a huge importer. And we have the commodities bubble right now, and that's why Goldman Sachs probably gave the sell signal to their clients, because commodities have gone up too soon, too fast, 25% since December. So everybody's just waiting to see right now, but there is a lot of turmoil right now in the markets.
Talking of things that look tight, copper you've particularly picked out of the commodity spectrum, which we talk about at length here in Australia, as something that looks like it's just lacking a bit of momentum at the moment. Why?
Mainly because the Eurozone industrial production number came out this morning, came out a little weaker than expected, and that just put added weight on copper, people thinking there won't be as much demand for it. The other news that you hear about more production, less production, they kind of cancel each other out. But right now, the world is on hold right now, and copper is one of the best indicators of how our economy is doing. And the fact of the matter is, people don't know, so they're just selling it and just looking for a safe haven. Copper's not a safe haven, but long term it will be a good buy.
Alan, the call from Goldman was, as we've been talking about, a kind of a suggestion that there's a change in the wind coming, sniffing a change in the wind perhaps. Do you feel that that's being experienced across any areas of the equity markets that you're watching?
Yeah, I do, but I think it's more to do with QE2. I think this is a QE2 feud rally. And I think once QE2, if they tighten it or slow it down this summer, I think that's where the problem comes in. That's where you see this free, loose money that's coming into the market. Remember, the government's buying $100 billion worth of treasuries a month from the institutions, and what they're doing is they're just putting that risk into equities. But I think once that stops, you're going to see this market unfortunately fall apart, because I agree with your previous guest. There's really no conviction here, and there's no really public trading. This is all traders trading. You can see it. We're under 1 billion shares today. Very light trading. We've had light for the last 12 sessions. So, I mean, this is more about technical trading than anything else. And without that QE2, that Fed rally that we're having, this market goes flat to down. I agree.
Larry, John Noonan from Thomson Reuters. Getting back to commodities once again, there's been quite a bit of focus on the U.S. this week because of the Goldman's note and also its earnings seasons in the U.S. But now we've got some really major data coming out of China tomorrow, our time, on Friday. Now, how important is that? I mean, obviously, one of the big growth engines for all commodity prices is China. And we had the IMF warn a couple nights ago that if there's any economy that could face a boom bust, it is China. So how important is China's numbers going forward?
The Chinese number is very important, and if they raise their RRR number again, actually, the market, last time that happened, the commodity markets actually rallied. So it's very important. All the commodities that they use for exportation and for their internal construction, the fact of the matter is their inflation actually is in check. I mean, I think people are thinking it's not, but the last several numbers have come out. They've been in check. And we'll wait and see. But right now, traders are putting a lot of focus on the numbers out of China.
Larry, one more question on a follow-up on that. Now, You were saying the market looks tight, and I agree. And technically, it looks as if we got maybe a few short-term tops in place. How much of a correction could we see, assuming that the U.S. economy continues to muddle along and grows, and assuming that China stays okay, even if growth moderates? How much of a correction could we see in commodities like copper?
I am a big bull on copper, so given the scenario that you just said to me, I don't see a correction. But if the Chinese numbers come out really hot, if we have trouble like balancing our budget and spending problems and stuff like that, could easily see a 10% correction in copper. I was particularly worried about the industrial production number that came out in the Eurozone today. That's been driving copper prices for the past 6 months, and that came out a lot weaker than expected. And so the demand for copper is going to be less. So we'll see what happens, but I see a 10 to 15% correction if worst case scenario.
Alan, can we throw it back to you as well, just in terms of some news out today? We had the retail sales report. You also had Obama's budget. What do you feel is as really moving things there or getting people talking? What's been important today?
Well, the retail sales came in a little weaker. They were 0.4. We were looking at 0.5. And remember, that was before gasoline at the pump here jumped up to basically $4 a gallon. $4 a gallon was a tipping point last time. Remember, 90% of America makes $32,000 a year or less. That means basically, if you're putting the average soccer mom, it's a 20-gallon tank in her care, she fills up twice a week. That's $180. That's a big tax on what they're doing. Less discretionary spending. And in a country that's powered by consumer spending, we need that. Now, as far as the president's budget goes, you know, budgets are done on a yearly basis. We just did last year's budget last week. They're talking 12 years out. No one puts much credence in that. We could have 3 other presidents within 12 years. So you look at that. They're just playing to their base. They don't take any of those budget series that far out.
Alan, just real quickly, John Noonan from Thomson Reuters. On this budget, from the overseas perspective, is there any chance that the Republicans and the White House will not get together about allowing the debt ceiling to be raised and face the possibility of default? Or is that just such a negative scenario that they will somehow come up with a solution at the 11th hour as they did last week?
Well, you know, the last time they did that, they closed for 21 days. This time we do have a Tea Party that really does not care if they close or not, but my gut feeling is they won't do it because last time it didn't work. It really backfired on the Republicans. It didn't play well to the public. I don't think you're going to see it this time. And at the end of the day, it really doesn't do anything if they close. Someday someone's going to address this, but I think it's going to be the market. I don't think it's going to be any politician. I think the market's going to correct so violently someday that someone's going to have to take a position in it. But as far as the politicians, I don't think they have the stomach or the will, especially coming to the election year, to really do much.
Alan Valdes, thanks so much for joining us. We appreciate that. And Larry Shover from Efficient Capital Management as well from Chicago.